Good morning, traders. TG Watkins here over simplertrading.com. And if you want to find more information about me specifically, you can come over to profitpilot.com. That is my branded website. So over there, you can find the newsletters that I write about the market. You can also look at the services between my alert service or any education classes, the Moxie indicator, anything like that. You can find over here at Profit Pilot. And then if you guys want, on StockCharts.com, since this is where we are broadcasting, you can come over here and check it out. If you want to purchase the indicator, you can. And we are working on some more classes that are specific to StockCharts. So that'll be something down the line. But hopefully, this time that I'm here with you every week and I show you these videos, that you kind of see some nice insight using the Moxie indicator and the perks of having it onto your trading platform and into your trading methodology. All right, so part of that, we're going to be getting into the market. We have been seeing that the market is not looking so great. Obviously, it's very high, but we're starting to watch it come down. We've been seeing, I think, underneath the surface, quite a few stocks starting to break down. A lot of earnings are getting hit, and we're just trying to figure out what's going on, and is this going to be something worse? Now, I do think that the markets will continue to move down, to pull back. I would love to see them pull back into strength, into support, but we're just not there yet, so we're going to have to kind of hang on to our hats and sit on your hands and maybe not do too much unless you like to trade to the short side. So let's get into it, and I'll show you a couple of things that I'm looking at. All right, so here on the S&P, what I want to show you is the daily and the hourly, and then I'll get into the weekly too. But the biggest thing that I've been seeing on the S&P is that we've been really overbought. You can see up here on the daily chart, we jumped outside of the 30 ATR and off the 8 EMA, so very, very overbought. And then we did get a little bit of a pullback, or at least sideways, kind of taking the energy out of it. But what you'll notice is it just never could break out. We got one little bump up, but that was a fake out. And then beyond that, price has just been moving sideways. Now, what it did do is we finally got a pullback close to the daily 21. That's kind of the first line in the sand. Oftentimes we see price come to the daily 21 and then bounce a little bit. If the trend is good, we should see price bounce off of the 21 and continue up. But I don't think it's going to really start a new long trend just here at the daily 21. I do think price is going to be whipping around a little bit, and then I would like to see if price does come back down to the daily 50. I know that's a long ways, but the more time that goes on, or at least price going sideways, the more time that the daily 50 has to actually move up closer to price. And so they're coming together like this, and that if price comes down, the daily 50 will be higher than where it is currently by the time price meets the 50. I've also seen it in the past that if the S&P does want to take a break like that, it can go from where it is now to the daily 50 in about 2 or 3 days. Granted, those would be some very strong, stiff moves to the downside, and it can really wreck your positions depending on what you're in. But if that happens, then I think that would be great for the market, and that would really help drive out some weak hands and actually test support. And then if it holds, we should see price continue to move back up to the upside. So that would be fantastic if we could get that. Part of the reason why I'm looking at that, and part of the reason why I'm saying that we've been expecting the market to move down or roll over or pull back, anything like that, is if you look at the hourly chart, we've had price moving up like this, and you'll notice that the Moxie indicator has been moving down. So that was the first thing that I've been watching. We've been watching this negative divergence start to build in. So why is price going higher on less energy via the Moxie indicator? The other thing to note is that even though in through here, after that initial dip, we've been seeing price continue to move up, but notice the Moxie indicator has just been going red the entire time. That is a huge red flag of what is the indicator trying to communicate to you. Why is price moving up, but the indicator keeps moving down? Something's not right. It's trying to tell you something. And what this has then produced is this is an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. And you can see that, well, this is the result. At some point, price is going to wear out because the indicator is telling you that energy and momentum is dead, going down, and negative. And price should not keep going up like that. So we finally got that breakdown here. And now at this point, price is below the hourly 50. So we can kind of go one of two ways. Either price is going to continue to get stuck under and rejected by the hourly 50, and we'll just start to see price move down like this. Or if price does want to bounce off of the daily 21, we could see price move up over the hourly 50. But yet again, if price is over the hourly 50 and the Moxie indicator is this far and this much below 0, then that's a false move. That's an inverse trampoline move, and price should not be up there. So I am not going to trust any moves to the upside until I see, well, hopefully a washout, but until I see the moving averages or the Moxie indicator and the lower time frame charts do the things that I want them to do. So let's look over here on the weekly chart. And what I want to show you is kind of a similar section to back here. You can see how price was off of the weekly 8, very similar to what we are having right now. And then you can also see that price is up here at the 30 ATR, very similar to the way it is currently. So I'm looking at this and saying, hey, last time we saw something like this, price was overbought. And what it do? Well, on the weekly basis, it just needed a couple quick dips below the weekly 8, kind of got close to the 21, and then it resumed. So I kind of think that we need something like that. I would love to see price actually come down like this and then move back up. And if we do that, then that's basically price coming back down to the daily 50. Because if we look back here and we show you that example that I showed you on the weekly time frame, well, that's right here on the daily time frame. And you can see that this and this sure look very, very similar to me. And you can see here how we got one bounce off of the 21, and we're getting a bounce off of the 21. And then you can see in like 2 days, in a very short swoop, price came right back down to the daily 50. Now, it took a double bottom off of that daily 50, but it got down there, tested it for support, and then the price continued to move back up. So that's generally what I'm looking for and expecting and hoping and thinking that that might happen. Now, the NASDAQ is basically the same situation as the S&P. We're seeing this. We could see that here price went higher. The Moxie indicator was lower. I've been watching that. And then I could also see that there was a gap between price and the hourly 50 that needed to be tested or needed to be filled. And basically when it got there, it went right through it. Then you can see that the Moxie indicator is now red below 0. I again think that here we have that gap, that distance between price and the daily 50. I think that's an issue, just like it was back here. So I'd like to see price come back down to the daily 50 and give us a fresh new entry. And then if we go over and we look at the IWM and the Dow, we've been seeing these things moving down ever since they stopped going up. I mean, granted, the IWM has been in something like an 8+ month sideways flag consolidation, and it finally broke out, which I think is great news. That's fantastic. But it was only the first move, and it was very extreme. Price went way up here outside of these moving averages and the 30 ATR and all this kind of stuff. It was just overbought, and now it's pulling back. And if you look, there was a gap between price and the daily 50, and where are we currently? For now, we're at the daily 50. Now, it could keep going lower, but I would generally be looking at the daily 50 as potential support, just like I'm looking for the S&P to be coming back down to the daily 50 as well. So here's that round trip up and then back down. In order for the market and broad-based support, because right now breadth is not that great. There's just not a lot going on. Breadth has been falling off of a cliff, and not a lot of names are keeping the market up. Only a handful of the big cap tech stocks are holding the market up, and even they're starting to weaken a bit. So I would like to see these things cycle around and come back down, and then we can hopefully find some support and move back up. But right now, we're just watching the IWM continue to do its pullback, and we'll just see where it goes. Now, some of those names, those big cap tech stocks that I was talking about, as far as them taking a little bit of a break and a breather, well, here's Tesla. And the thing that I want to mention here is that, yes, earlier in the week or last week, Tesla, after its pullback from Elon's Twitter poll and all that kind of stuff about unrealized gains, it did bounce. But I did not get into something like this. Unless you are going to take a very short-term trade and do something like that, this just wasn't a swing trade. If you did take a short-term trade like that, using the Moxie indicator, you should understand that you are trading into resistance and into a setup that is likely to have price pull back. And what that setup is an inverse trampoline move. So price should not be over the 50 if the Moxie indicator is below 0, and that's what we had. So we had price moving up over the 50 while the Moxie indicator was below 0. And I was guiding my subscribers. I said, hey, this is not a legitimate move. It is a move, but you need to be very, very prepared that price is going to pull back to at least the hourly 50. And that's exactly what we got right here. Now, again, it could keep going lower, but I'm just trying to show you guys how this works using the inverse trampoline setup and to be aware of something like this. Now, there's another thing that we can talk about when it comes to Tesla, and that they had a similar situation right in through here. So let me zoom out and we'll slide this thing over and we'll go find that spot right here. So you can see I'll have my cursors lined up like this right there. And what you can see is the same thing that Tesla is currently doing. Right here, price got up over the hourly 50. Notice that the Moxie indicator was below zero the entire time. So that is an inverse trampoline move. Price should not be over the 50 if the indicator is below zero. It's a false move. And if you were going to take that trade, if you were trading that, hopefully short term, you should realize that you need to sell into it because price is likely to come back down and come back down hard and fail. Number one, to the hourly 50 and then probably below because, well, the Moxie indicator is below zero. And you can see that was right here. And I sure tell you, that looks a lot like what Tesla is doing currently. So I do think Tesla is taking a break, probably needs to pull back a little bit more. And we could see an inverse trampoline move on that last setup. Then we get into, I'll show you TAN. This is the solar ETF. But what I want to show you is, hey, we had a really great move. Okay, great. Kind of caught me by surprise. I wasn't able to take advantage of it too much. But that move up there, for as great as it was, at some point was going to come back down. Now, let me show you how that looks so that you can be prepared that price is going to have to come back down. And this is where the Moxie indicator really is important and helps add to your trading strategies. So number one, realize that price is overbought because it's outside of those 30 ATRs. Number two, realize that price is pretty far away from support, that daily 50 support, which is what I'm talking about with the markets and Tesla and just so many other names. They're very, very far away from their daily 50s. So price is just on its own accord likely to come back down. Then the other thing, and this is how you don't get suckered into a trade, is right here you can see another inverse trampoline move. In fact, two of them. Price should not be over the 50 if the Moxie indicator is below zero. And you could see that even though price, it was choppy and dropping sideways, notice that the Moxie indicator kept trending down in a very, very strong way. I mean, that thing was just heading to the floor. And so that is trying to tell you that, hey, the TAN, the ETF here, was unlikely to keep moving up from this point. And that's where I then see that price is starting to break down towards the daily 50. So we're just going to have to wait and watch and see if this ends up being support and where it's going to go. But for right now, there's no trade. We're just watching this stuff pull back. Another one on that, in that kind of stream of consciousness, is USO. So notice USO had a really good run up here at 30 ATR and all that kind of stuff. And what do we have? Giant gap between price and the daily 50, just like TAN. Price got too far away from the daily 50. Well, how did we start seeing that happen? How did this thing come about? If we look at the hourly chart, I'll zoom in a little bit there for us. Here is the Moxie price trigger. That is a visual representation, just trying to tell you that the Moxie indicator has now gone negative. So as you can see, you can be watching as price continues up like this, but notice that the Moxie indicator is trending down. There is your negative divergence. That's trying to tell you that this upward momentum, this upward move is starting to run out of energy because the Moxie indicator is trying to tell you how much gas is in the tank. If you look here, this distance above zero is how much energy is in the stock. And when you run out of gas, what happens next? You run out of energy, you run out of upward momentum. And what you can see here is even though these bounces, there were some strong bounces, just like what I'm prepared for with the S&P and the markets. But what are those bounces? They were inverse trampoline moves. Price should not be over the 50 if the Moxie indicator is below zero. And so we see that. We see it again right now. So I'm still not ready to go buy USO or oil or anything else like that. It still needs some time. So it's not quite ready. Then we can come over to ZM. I noticed a couple inverse trampoline moves on this one. Now, obviously, this thing, it just had earnings. You should pretty much just not even be involved with this thing if you're trying to look to the long side. Only if you are trading short does something like this even apply, because this thing has just been going down for months. And you can see here, any bounces into the downtrending daily 50 is resistance. In fact, even this up move was an inverse trampoline move. Look how far below zero the Moxie indicator was below zero. This is not good. The price is not going to go up when the indicator is that far below zero, when it's that negative. And so clearly it ran right into the underside of a downtrending daily 50. Now, just before earnings, there were some clues, at least for this one. Notice here, just like I showed on USO a second ago, see how price is over the hourly 50, but notice that the Moxie indicator is below 0. Price should not be over the 50 if the indicator is below 0. So that is an inverse trampoline move, and should not be looking long. In fact, that was a pretty sweet short entry if you were looking for one. And then it had earnings, and this thing just cascaded down. So hopefully somebody out there is making good money off of the short for ZM. All right, a couple others that we can look at. Peloton, kind of in the same situation. It has not been doing well. These old darlings of the COVID era seems to have run their course. Either everyone's already on Zoom or already owns a Peloton who's going to, or now that we're kind of getting back out there, we don't need them as much. So their growth is probably going to fall off, and that is why these things are getting hammered. So that being said, I'll just show you basically price kept running into the underside of a downtrending daily 50. Here, as of right here, the Moxie indicator was below 0, so that all worked out very, very well to the downside. And then right here, you could see price was getting trapped and rejected by the underside of a downtrending hourly 50. And you can see the Moxie indicator just down, down, down. Then had earnings, and it continued to go down. So steer clear of this thing unless you're trying to short it. All right, DoorDash, just some challenging things. I just wanted to bring this to your attention. It was another earnings play. It jumped, it jumped on earnings, but it just didn't hold. And this is one of those things where, hey, little overbought, you look for a pullback. Is that pullback going to hold? And this thing just did not. This was not a pullback. It was an implosion. So price did get overbought. It went up outside of that third ATR, all that kind of stuff. And same here on the hourly. Now, what I would normally look for is there is a gap here between price and the hourly 50. So I would look to see if price could hold the hourly 50. And when this thing just wasn't holding or couldn't hold or anything like that and continue down, you got to get out. So either don't take a trade because it never actually held any moving averages, or you got to get out because it's not working, because it's not holding any moving averages. So there's Dash not doing so well. And then SOFI. Now, SoFi has really just been up and down. I do want to show you this on the monthly and weekly because it seems as though we should probably keep an eye on this thing for going higher at some point in the future. Obviously, it's like up, down, up, down, up, down. But I think the difference is that this 8 and 21 looks a little bit better. Whereas the previous one was very angular, came up and just got slammed back down. This one's starting to look pretty decent. It looks like it wants to go higher. But it's not there yet. We still have to just wait and watch. And if you look here on the monthly, we do have price over the monthly 10. So it's just beginning because this is still a fairly new stock. And if we look here on the daily and hourly, it got overbought. You can see a giant gap between price and the daily 50. And then yet again, another inverse trampoline move. And this was after earnings. I think earnings was right here. Jumped up on earnings, but notice price was over the 50. The Moxie indicator was below 0. So for as much as the price moved up and was able to recapture the hourly 50, the Moxie indicator, just like, man, I'm just not going to go up. That's not going to happen. So that's something that if you were trading in a stock like this, you should be, when you're right there, you should be looking at that Moxie indicator and be like, ooh, that's something to be aware of. And if you're going to keep plowing ahead, well, you got to figure out where your stops are, or figure out, move them up or something like that. But basically right here, when price failed the hourly 50, that was confirmation that it wasn't going to work out. And that was confirmation of the inverse trampoline move. At this point, we just got to wait and watch. I'd love to say that this will continue going up into the future, but we're going to have to just wait for price to find its lower support and start actually turning around and moving up. And then we look at Lulu. Oh, didn't have that right. Lulu. Great. And another one that mostly consolidating. Keep an eye on it. It might need to go down a little bit further, but yet again, another inverse trampoline move. Notice price over the hourly 50, but the Moxie indicator below 0. So there you go. Just keep showing you example after example. I do think it's flagging sideways. It could continue to move down, but I think the reason is because price is too far away from the daily 50. Yeah, it just wants to get closer to the daily 50. And whatever it needs to do to kind of get there, I think is what's happening. And if we look at Netflix as an example, it too is, I think, flagging sideways, because if you look at the daily chart, kind of zoom in there you go. If we look at the daily chart, it's had a really, really good move. Like, ever since here, such a good move that it has not touched the daily 50 since then. So wonderful, wonderful move. But at some point, it is going to tire out, tucker out, wear out a little bit. And it's going to have to find support. So it's either going to have to come down to support or go sideways to support. And for now, it looks as though Netflix mostly just wants to go sideways to support. And that's what we're going to be looking at. The other thing is, this wasn't an exact inverse trampoline move, but for all intents and purposes, you can see here price was over the hourly 50 and the Moxie indicator was below zero. Only one little point did it just cross over zero, but you should be aware of that, hey, when price is crossing over the 50, the Moxie indicator is so far below zero that this is actually going to be a problem. It's price leading the indicator, and that's not a great thing. It's price has to just yank energy up there on its own accord, and that's not a great thing. And you can see this is what it's trying to show. So back when it wanted to come back down to see if the hourly 50 was going to be support, it didn't. It went right through it. And that should have been no surprise considering the activity or how far below zero the Moxie indicator was when price started to move up. All right, well, there you have it, everybody. We kind of went through, showed a few things. The market's not looking that great out there. There are a lot of names getting pretty hammered right now. Breadth is not that good. It's pretty poor. And I think a lot of things are, we just had a huge move in the market for the last few weeks. And I think that the indexes are just so severely overbought that we need to come back down. I'm kind of targeting the S&P to the daily 50. We'll have to see when that happens and if it happens, but that's kind of what I'm looking at. So don't be surprised if it happens. And if it does, then fantastic. Then that means that we've actually reset. We have price coming back down to support, and then we should be looking for stocks to come back up after that. So this could just be a big cycling throughout the market. We're looking for names to cycle back down, and then hopefully they are in good basing patterns while then the index starts to move down. And then hopefully once the index does its pullback and then finds support and starts to move up, we can see a whole another round of names starting to find some support and actually go up. So I'd love to see that. Don't know if it's going to happen, but I think that would help set us up for the Santa Claus rally that I think we all are looking for. So, all right, everyone, you take care. And any questions, come over here to profitpilot.com. Thanks again.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.